Welcome to TradeTheNBI.com. This is John. This report is for the 22nd, and while we start the week off in a government shutdown, and a bunch of people were asking me, how that was going to impact things, and, should they be terrified? And you'll notice I really didn't talk much about it leading up to it because it really isn't as much a factor now that you have the economy pretty much running on its own, so you don't have this need for the government to be spending oodles of money in order to prop things up. So there's been a dynamic shift there. Now, if it were to progress, yes, it would create some problematic situations down the road, but it would appear that there seems to be a desire to not have that take place at this particular point. At least that's the market's view of things, and that's all that matters. The rest is just conjecture. Where money goes really determines things. So don't see this yet as being a problem. That said, we can look at the numbers. We can see a little bit more short activity increase here, coming off of what was a nice little move there, but what it really did was allowed for the shakeout reset. We're still above the plus 15, so still a little bit in what we would call an overbought condition. Plenty of positive extremes, though. Some of that's been eased off from where we were. You can see we were in far greater extremes right here, but money just keeps flowing in, and that actually eased off the situation. We had just a little bit of overdone right up in here, but we're starting the day, in a yellow space on the extremes. If I go ahead and click what that value is, it doesn't show up on your reading, but you can see it's negative 0.35, so just a fraction below the 0 point before it gets into positive. But allowing the shakeout to reset gives all sorts of opportunities. Now you can see the midterm buyers a little bit weaker, as well as short term, but they're above negative 13.5, so that's still positive. If it continues to dip, that would be a little more problematic. Still, you have rising ABM. So all these things, combined, give very reasonable thresholds. Again, an expectation of a return to the mean would not be out of range. NASDAQ much stronger here. You can definitely see pretty positive. I mean, you could still end up with the DOC spread going here, but this particular point hasn't started at this stage. And so until it actually does, things are okay. The euro continuing to maintain this extreme position. It's well outside all the markers everybody has for the EU and that, but like I mentioned, this all correlated back to China bailing on the idea of U.S. treasuries and that kind of shift of them. Sort of a little hidden war amongst the whole North Korea issue. You also had the destroyer going, within that 12-mile limit that, the Chinese were claiming this little island, blah, blah, blah. So a lot of little hidden intrigue, and, it gets played out in the financial world as well, because they know that that's where the biggest impact can have. So this still helps the S&P because overseas earnings look good, and of course, not a surprise here with the treasuries falling back. And this is really going to be the question of the Fed and how slow it will be. My impression is that they're going to lag any inflation in a significant way. I mean, they keep talking about reducing the balance sheet of the Fed. Don't see how they're going to do much of that in the short term, simply because I don't know who's going to be buying that at this particular point, though with the amount of excess value being created and the potential for increased return. It's just a question of the inflationary numbers. And we look at oil, it's already built in right here that there's going to be some. Is it enough to really start to squeeze things? We're not seeing much more movement from gold after the big rise, so that's sort of baked in as well. And a lot of this is looking 5-6 months ahead. We were talking also about the relationship between the Bitcoin futures as well as it relates to gold. That's pretty much become a stagnant trade at this particular point. You might even see some weakness going in here, and about 50% of where it was, a little bit over 50% from its highs. So sort of consolidating in a quiet period at this particular point. And then if we look at the 5K, we started off with a pretty massive rally that just came back, and it went back below the 50%, retraced all the way down to the 23 before it cut a new buy, and that just moved it right back up to the highs where we just pretty much consolidated with. Moved to the high, returned to the 50%. We had no changes in the highs or lows other than a slight high increase, which pretty much kept things pretty much balanced. Every time you reach the 50%, we had a full reset, even though not quite with the steel, which means it wasn't expected to be very strong. It wasn't until we started getting dips below the cyan that you ended up with this push that took place right there, and that actually had a partial reset of the cyan. Not quite below 13.5, where we like to see these oversold conditions, because those usually produce the best kind of pops. Particularly when they're around key support lines. That's what I'm always looking for. So the rising lows in this particular case called for a return, except for the fact you were making new highs. So negates it at that particular point. So we just got the peak. Short signal comes in. What do we get? A return to the 50%, but actually in this case went all the way down to the 23 in the pre-market for the open, and we've just jagged back and forth right to that 50%. So it was a decent little short signal that came in there. It just happened quick with the futures, so that was the way the day had ended, and kind of get that faux finish where you get the pop, and then boom, they gap it down to clear out any of the stops. You had this positive extreme that was right up in here, cleared that out. Perfect case. Still looking a little weak at this particular point without any decline of the steel, and we ended up with that no spark zone buy. And when I say no spark zone, you get this range between the green and the white here, between -7.5 and -13.5, where when you tend to get crossovers, it tends to be soft rallies that tend not to hold too well, and they kind of fade off. This is why we look for these extreme dips that come below the -13.5. You can see this one didn't quite dip below it, but this red did. We got to -14, and sure enough, you can see it produced a much better spark going forward. This one that crossed over here, it had a little bit of a move, but it just doesn't sustain itself for as long a period. It just tends to be. It can still happen, and typically from those particular cases, we just become more defensive with our stops. Is usually the easiest way to handle that one. So all in all, I think we're probably in for a little more weakness, depending on the ebb and flow of politics at this particular point. If people think that it's likely to drag on longer, that could put a little bit more of a strain on things, so people just collect some profits and keep some cash, particularly with the month end coming. It's still been quite an excellent start to the year. If we take a look at our daily here with the NBI Opus, still in that extreme hawk from the 2797. So that could still get filled back in there, being that we're up this high coming off of the extremes, but still it points to the overall bias has been pretty darn good. In fact, if we look at the beginning of the month, which would be right about here, we opened at 2675 and you're at 28, so decent uplift. Some of this is baking in all of that tax reform, blah 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 blah. So all good stuff. As always, though, I will post anything relevant on the Skype chat. Trade well.